Welcome to Trade Recap for the 10th of June 2025. And today has been an interesting day, and it started off with two blunders, I should say. And the reason for that is, although the trade setups looked quite nice, according to the market maker model, in alignment with CRT on the 1 hour time frame, it actually should not have been triggered, or they should not have been triggered, because there were two back-to-back trades and they both looked quite appealing. However, they broke the cardinal rule of entering trades only within the first 4 hours of the London session. So here you can see the green horizontal, or rather the green vertical rows. So the first one is, of course, first hour. Second one, which is slightly brighter. This is the second hour, and then the third hour, which looks the exact same as the first hour in terms of its color composition. And then the fourth hour is here, which is dark, but it's still applicable. So I highly recommend using this fourth hour as well. So the idea is the cardinal rule must be followed. So one of the cardinal rules is that we must trade only from here, which is the first hour, up to here. Now, on the odd occasion, only with the JPY pairs, we can get in on a trade half an hour earlier. So that would be 2:30 a.m. Eastern Standard Time. So maximum half an hour prior to this first green colored session. All right, so this is what we did. We completely broke that rule. This was not a JPY pair. This was GBP NZ, and so I had to face the consequences, really. Two losses which could have easily been avoided. And so that's 1% each, totaling 2% of loss. And then at the towards the end of the first hour of the London session, this wonderful formation came into play, and I noticed and I jumped at it. This was based off this 1 hour CRT. As you can see, at the end of the first hour of London session, this wickish candle formation confirmed, or rather suggested very strongly, that the market is going to go up and fill in that candle range based on the 1 hour. So what happened was, as you can see here, based on the 5-minute fib levels, price dropped down to 0.5, but I missed that. So what I did instead was I joined 2 candles later when the price was at the 0.618 level, and then I kept the stop loss at 0.382 level. This is, of course, based on the 5-minute fib tracement. And so price immediately went up in favor of our target in our direction. Now, what I did was I just followed the standard sort of format that we usually have, which is targeting 1.9 fib level on the 5-minute time frame. And so, but in hindsight, I should have gone for at least 75% to squeeze more profit out of this trade. So that would have resulted in slightly better RR. What we received was 5.61, but it could have easily been 6.57. So yeah, in fact, as you can see, if I get out of the replay mode, price actually did much better. It went all the way to and it covered the full range of the CRT. So, of the CRT candle. So it went all the way to 100%, in other words. Yeah, not just 75, but also 100%. However, I wouldn't have felt comfortable going all the way because there was this 15-minute bearish order block between 75% and 100%. So I would have been, comfortably, I could have gone that extra little distance to squeeze in more profit and get out at 75% level instead of where I got out at, which was between 50% and 75%. But all in all, it was a profitable trade, and these were the only three trades that I took today. Having said that, there were some interesting developments elsewhere. So pound USD, for example, again, same at the same time. So it was kind of difficult for me to keep my focus on both of them. So the one I took was Australia USD, and the one that I missed was pound USD. And in fact, pound USD yielded much more, and even though it was only up to the 50% level, as you can see here, it just went up and up and up with a few retracements here and there, but all in all, it was a strong bullish movement as soon as it hit the 50% fib level on the 5-minute time frame. And again, this was based on the 1 hour CRT. This was the CRT, this was the wickish candle, and then off it went. So right now, as we speak, this is the first hour of American session, and New York session, I should say, right? So it is just at the 50% level. But in any case, if I had seen it, I would have definitely taken this one as well. Now, there was another one, which was pound Aussie? No, not pound Aussie, pound CAD, I believe. Yes. Pound CAD. However, that would have stopped us out eventually. And in hindsight, because it broke that, one level, the 100% level on the 5-minute time frame, because it broke that, essentially breaking structure, I would have at least put the stop loss to 0.5% as opposed to the full 1%. So, this would have been a 0.5 loss, 0.5% loss, and the pound USD would have been a 6.49% profit. So overall 5 or 6 even, 6% profit that we missed out on. But I'm not complaining. It's been a profitable day, and just 3 trades, 2 losses, and they were very unnecessary losses, as explained. And the profitable one gave us all the losses that we had today and yesterday. Yesterday's losses were 5. So most of the losses of yesterday, you could say 3 out of 5 of the losses of yesterday and 2 losses of today were regained with this one profitable trade of 5.61 RR. So this is the beauty of the strategy. It usually gives us between 4.5 to 6.5 RR, depending on how you split it up, whether you partial it out or not. But in general, that's the kind of risk to reward we're looking at before we place our trades. Hope this was useful, and I look forward to seeing you again tomorrow.